Good afternoon, investors. You are now on KleverStock with me, Dini, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Opening today's market wrap with a look at the domestic front. The Malaysian stock market started Tuesday morning on a relatively steady footing, with the benchmark FBM KLCI opening marginally higher at 1,727.52. While diminishing prospects for a Middle East peace deal sent global investors scrambling for safe haven assets, the local market's initial reaction remains subdued. Index stability was largely underpinned by a rally across domestic energy and commodity-linked counters following a sharp surge in Brent crude oil futures past $90 per barrel. Market commentary from APAC Securities notes that the immediate trading environment in Malaysia is cautious rather than outright bearish, supported by pockets of relative local strength. The research house highlighted that a stabilizing oil scenario, an escalated Middle East conflict, resilient U.S. consumer earnings, and softer bond yields could encourage investors to return to risk assets and create room for a broader KLCI recovery. Conversely, any worsening of US-Iran friction alongside spikes in crude oil and bond yields could intensify persistent inflation concerns and keep market participants on the defensive. Under current market conditions, APAC Securities expects selective stock picking to dominate trading activity. Investors are favoring domestic defensive sectors, construction, energy names, and technology counters supported by semiconductor demand, while tracking financial heavyweights for broader direction on the main index. Leading the morning gainers on the index, Petronas Chemical rose 7 cents to 4 ringgit and 68 cents. Kuala Lumpur Kepong added 14 cents to 21 ringgit and 70 cents, and SD Guthrie gained 6 cents to 6 ringgit and 59 cents. Among the most active counters traded on Bursa Malaysia, JAKS Resources remain unchanged at 13.5 cents. Tanco dropped half a cent to 24 cents, and Engineer added half a cent to trade at 4 cents. Moving on to our local currency and foreign exchange, the Malaysian ringgit opened on a firm note against major global currencies this morning, while remaining broadly flat against the US dollar, supported by solid domestic economic indicators and shifting global interest rate expectations. At the 8 a.m. opening bell, the ringgit stood at 4.0585 to 4.0675 against the greenback, matching Monday's closing levels. Bank Muamalat Malaysia Chief Economist Dr. Muhammad Afzal Nizam noted that declining expectations of further US Federal Reserve interest rate hikes continue to support emerging market currencies. Furthermore, Malaysia's economy remains in an optimal position with robust GDP growth paired with controlled inflation following July's headline and core CPI prints moderating to 1.8%. Consequently, the ringgit is projected to trade within a range of 4.06 to 4.08 against the dollar today. Across the broader currency market, the local note recorded gains against a basket of major trading partners. The ringgit strengthened against the Japanese yen to 2.5471, advanced against the British pound to 5.4993, and rose vis-a-vis the euro to 4.7010. Regional performance was mixed, with the local currency edging up against the Singapore dollar to 3.1772 and the Thai baht to 12.2836, while holding steady against the Philippine peso and Indonesian rupiah. Now for some economic news. Malaysia's broad money supply expansion has accelerated to levels last recorded during the height of the COVID-19 pandemic, raising concerns over potential medium-term inflationary pressures. According to a report by the Center for Market Education, Malaysia's broad market supply, or M3, expanded 6.78% year-on-year in June 2026. This rate approaches the monetary expansion peaks of 6.91% in August 2020 and 6.75% in September 2020. CME noted that money growth has steadily built momentum since January, while producer price index inflation surged from a contraction of 3.45% in February to 9.22% in June, driven by geopolitical friction and shipping bottlenecks around the Strait of Hormuz. However, mainstream bank economists view the monetary setup through a different lens. Bank Muamalat Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid emphasized that expanding M3 liquidity is actively supporting commercial capital expenditure, business investment, and domestic demand. With domestic demand stabilizing at 5.1% in the second quarter and core consumer inflation moderating to 1.8% in July, demand pull inflation remains subdued. Consequently, Bank Negara Malaysia is expected to maintain its overnight policy rate to sustain economic growth. Concurrently, economist Dr. Geoffrey Williams pointed that faster M3 growth aligns with Malaysia's robust real GDP expansion of 6% in the second quarter. Unlike the pandemic era where productive output was restricted, financial institutions are currently creating liquidity to fund tangible industrial expansion under the medium-term fiscal plan framework. We will now take a short break, but don't go away. We will return shortly with corporate news developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. Malakoff Corporation Berhad reported a sharp decline in earnings for its second quarter ended June 30, 2026, as operational disruption at its Tanjung Bin power plant in Johor weighed heavily on performance. Net profit for the second quarter nearly halved to 31.7 million ringgit from 62.8 million ringgit a year earlier. Quarterly revenue slipped 5.4% to 1.91 billion ringgit, impacted by equipment failures in the Tanjung Bin complex involving a steam turbine, generator rotor, and a generator hydrogen cooler leak. For the first half of financial year 2026, net profit fell 46.5% to 51.8 million ringgit, while total revenue contracted 19% to 3.28 billion ringgit. Despite the tough first half, operational recovery is progressing as planned. Malakoff confirmed that its coal handling system at Tanjung Bin has been restored to its full design capacity of up to 5,000 tons per hour, with equipment reinstallation expected to complete by mid-August. Group Chief Executive Officer Shahrul Nizam Samsudin noted that all units at the complex are now operating close to full capacity, positioning the group for a stronger operational rebound in the second half. Performance across Malakoff gas-fired assets in Lumut and Prai provided stability during the first quarter. The group secured power purchase agreement extensions with Tenaga Nasional Berhad for its two Lumut gas plants through 2029, securing 1,732 megawatts of generation capacity. Additionally, subsidiary Malakoff Power Berhad successfully issued a 450 million ringgit sustainable transition sukuk, which saw a 4.5 times oversubscription rate. Within its Environmental Solutions Division, Malakoff secured a 21-year power purchase agreement with TNB for its 22-megawatt Sungai Udang waste-to-energy facility. Concurrently, subsidiary Alam Flora plans to deploy 242 electric vehicles and equipment units by year-end, including Malaysia's first electric road sweeper, advancing the group's decarbonization targets. Up next, we have a market update. Foreign institutional investors remain net sellers on Bursa Malaysia for a second consecutive week, logging a total net outflow of 623.6 million ringgit for the week ended August 14. According to weekly fund flow tracking by MBSB Research, offshore funds were net sellers across all 5 trading sessions. Foreign selling momentum peaked on Friday, which saw the heaviest daily net outflow of 181.3 million ringgit. Sectoral allocations revealed significant foreign profit-taking across key heavyweights. The largest foreign net outflows hit financial services at minus 469.3 million ringgit, followed by industrial products and services at minus 121.2 million ringgit, and consumer products and services at minus 89.6 million ringgit. Conversely, foreign funds accumulated select defensive and growth counters, directing net inflows into transportation and logistics at 103.8 million ringgit, telecommunications and media at 34.9 million ringgit, and energy at 19.7 million ringgit. Domestic market participants absorbed the offshore selling pressure. Retail investors snapped a 2-week net selling streak to post 268.1 million ringgit in net purchases. Simultaneously, local institutions extended their net buying run to a third consecutive week, injecting 355.5 million ringgit into local equities. Overall trading intensity moderated across the board, with average daily trading volume declining by 1.1% for retail traders, 10.9% for domestic institutions, and 3.7% for foreign funds. Interestingly, Malaysia's net foreign outflows diverged from the broader regional trend, where 8 monitored Asian markets collectively attracted $9.64 billion in net foreign inflows during the same period. Today's major corporate developments and deals across Malaysia. We begin with a major cash-raising exercise from Ecovest Berhad, which plans to raise up to 355.85 million ringgit via a renounceable rights issue of up to 1.78 billion shares priced at 20 cents each. The proceeds will fund key infrastructure and property projects, including the Light Expressway and pared down group debt. In governance updates, Destiny Berhad directors Dato Abdul Aziz Sheikh Fadzeh and Ismail Mustafa have resigned effective August 15 ahead of an extraordinary general meeting scheduled for August 21 requisitioned by shareholders to remove them. Meanwhile, shares in offshore oil and gas services provider Alam Maritime Resources Berhad touched a 5-month low after its group managing director and CEO, Dato Azmi Ahmad, was remanded to facilitate an ongoing Malaysian Anti-Corruption Commission investigation. On the earnings front, retail giant 99 Speedmart Retail Holdings Berhad posted a 13.36% increase in second quarter net profit to 163.95 million ringgit, supported by revenue growth to 3.08 billion ringgit, driven by expanded outlet network traffic. Gaming operator Sports Toto Berhad saw its fourth quarter net profit jump 55% year-on-year to 62.54 million ringgit on lower direct and indirect costs. The group declared a fourth interim dividend of 3 cents per share payable October 16, taking its total financial year 2026 dividend payout to 11 cents per share. Finally, semiconductor newcomer Skychip Berhad reported a first quarter net profit of 13.92 million ringgit on revenue of 49.62 million ringgit, backed by a 42% gross margin. Despite strong demand for its AI high-performance computing and automotive chips, Skychip's stock dipped 4.9% in early trade as initial earnings trade select sell-side forecast due to the timing of milestone revenue recognition. That's a wrap for Midday Roundup with me, Dini, on KleverStock. Thank you for choosing us, investors. Stay tuned for our upcoming live stream programs.